You've said that you didn't buy the Bitcoin to sell it, but would MicroStrategy ever take some off the table when you sense the market is at a top and then just buy in later when there's another correction? Or do you just plan to hodl through all the 80% downturns?
Yeah, again, I just disagree with your characterization. I don't expect an 80% downturn. I don't think it's a speculative asset. I don't think you can quote unquote take money off the table. The point is, if you have the superior asset, it's going up forever, Laura. Forever, Laura. You know, you're speaking like a crypto trader right now, right? Like, you know, in Zimbabwe, you think they would take money off the table, right? Like maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically thermodynamically superior as an asset. If you have the superior asset, it's going up forever, Laura. Forever, Laura.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks traded mixed on Wednesday, with the Dow eyeing a fresh all-time record high, but big tech stocks wobbling as chances grew that the record-long US shutdown will end soon. Guys, today was actually a broadly green day. I mean, excluding the mega caps and energy right here. Energy took it a bit on the chin, but like look at the mega caps, right? Meta, Google were down 1.64 and 2.46%, right? But then you look at the rest of the consumer communication services space, they were very green. Netflix, Disney, T-Mobile, right? Software was actually very green, and the broad semiconductor space was green on the back of some news from AMD. We'll talk about why. You can see AMD was up 7.91%, but Nvidia was down 0.24%. Microsoft was flat. Apple was flat. Infrastructure really took it on the chin. So too did Amazon and Tesla. And then you see that. So the mag caps, were flat to down. The rest of the market was really, really positive. Healthcare right here, really, really positive. But again, healthcare took it on the chin a couple of days ago. So we are seeing, a bit of a relief rally, maybe some short covering, etc. Financials were just very, very green. The market realizing, hey, earnings were really, really good. These stocks are down like 10 to 15% off their highs. Time to buy the dip. And we saw the same here with industrials, right? basic materials, even in healthcare. Some of these names, some of these software names, look, the market, a lot of these stocks, while the S&P 500 was down 4% off its highs, some of these stocks, are in like 10% corrections. For example, Meta is in a 24% correction. And I think market buyers are starting to come in by the dip, especially as we see government shutdown news and some other positive developments that we are seeing in the market. This is what the sector analysis looked like. So the worst performing sectors here was the energy space, communication services, XLY, consumer discretionary, and then real estate, right? And then XLU was pretty much flat. And this is largely just, defensive sectors. I mean, staples is in there as well, but like utilities, real estate, right? These are very, very defensive sectors, but also cyclical sectors in there, like, for example, communication services and discretionary. Now, tech, despite what happened with Nvidia and Microsoft and Apple, right, still up on the day. And that's because software performed really, really well, and the broad semiconductor space performed very, very well. Industrials were up, financials were up in a big way, up 1%. Very, very solid move right there. Materials up 1.17%, healthcare up 1.53%, and the biggest mover here was actually gold. And I think that has to do with the stimmy checks, the government shutdown is going to be a flood of liquidity, and it's sort of like a debasement trade, an inflation trade. Gold up 1.92%, very, very strong moves in the sector. Gold continues to just rally. In fact, gold was up about 1.7% yesterday as well. So gold looking like it puts in a bottom and wants to move higher. When we look at the factor analysis, it was really just, large cap core that was down here today. Large cap growth underperformed, relatively speaking. Large cap value performed very, very well. In fact, it was the best performing sector, as you guys can see right here. And then, mid caps and small caps were in between, but generally a very, very good day in the market, especially if you were positioned in the right sectors. And this all comes off the fact that the US government shutdown is probably going to be over. Now, there is a procedural vote happening at 7 p.m. tonight on Wednesday, pretty much to end the government shutdown and to fund the government through January 30th. So we're going to do this entire shenanigans again January 30th, unless we can actually get a budget bill. That being said, this is a good thing. Federal workers will be back paid. I'm really happy to see that. And this is part of the reason why we're seeing, strength in the market. Now, with regards to liquidity and why gold is rallying, we've seen a lot of this in the market saying, hey, we want to make capital, especially debt capital, easily accessible to the average American. And Bill Pulte has come out and said, we're looking at portable mortgages. So pretty much if you have a 3% mortgage, you can transfer that mortgage to your next home purchase. It's going to make it a lot cheaper to get capital. Also the 50-year mortgage, right, which people are very divisive on. But this is essentially just like consumer credit creation if these do come to par. And that is actually why we're seeing gold rally. On the AI front, right, Anthropic came out and announced they will be investing $50 billion in US AI data centers, starting with Texas and New York. The data centers will be constructed with the help of FluidStack, which helps build our massive GPU clusters. Furthermore, AMD their stock jumped significantly today on their outlook. They say AI growth is boosting margins. Lisa Su revealed that the firm is seeing strong momentum with multiple gigawatt scale project opportunities for his MI450 series chips. Those chips compete with NVIDIA's chips and Helios rack scale offerings across hyperscalers, AI native companies, and sovereign AI businesses. So AMD seeing growth all over. Lisa Su also said the company's data center business is on track to make tens of billions of dollars of revenue in 2027 and see a clear path to double-digit share of the AI data center market. I believe AMD right now has about 7% share, somewhere around there. Don't quote me. But yeah, single-digit share. They're going to get double-digit share. And Lisa Su also said the AI data center market will be worth $1 trillion by 2030. Currently, it's worth close to about $300 billion. So you're looking at about a 3x by 2030. AMD was up in a big way on the back of this news, up 7.75%. It brought the broad semiconductor space up with it. However, NVIDIA did not move on the back of this. NVIDIA was pretty much flat on the day. Now, CoreWeave was actually up 4% here in the pre-market, again, on the back of what we saw from AMD, also bouncing after its earnings a couple of days ago. But CoreWeave also came out Wednesday and said it entered into an agreement to increase its revolving credit facility, a flexible line of credit that gives it ongoing access to funds it can draw on if needed. That credit facility went from $1.5 billion to $2.5 billion, funded by JP Morgan and Goldman Sachs. Circle Internet Group, and I think this is why crypto took it on the chin, was down 10% today. Now, it beat on revenue, beat on earnings. In fact, the company is still growing like an absolute weed, right? However, The reason why the stock was down 10% is because the issuer lifted its adjusted operating expenses forecast for the fiscal year, coupled with the fact that rates will be decreasing after we saw 7 out of the 12 Fed governors say that they're looking for a 50 basis point rate cut in December. This impacts margins directly, so Circle taking it on the chin there. And then for everything we saw today, there was 3,200 advances, 2,900 decliners. We saw net outflows in the Nasdaq 100 and the New York Stock Exchange, the S&P 500 flat, and market momentum is returning. Guys, we've recaptured the 5-day, the 20-day, the 100-day. We always held the 200-day and 150-day, as you can see here from last week. However, the 50-day continues to antagonize us. However, looking very, very positive, and it does look like the market is poised to go higher. It does look like we are starting to put in a bottom, especially when you look at the equal weight, the broad market. We're seeing strength in that, and that's actually what you want to see. Bull markets are built on strong market breadth. Now, looking at the charts, this is a third day in the row when we've seen the equal weight outperform the S&P 500 and the Nasdaq 100. We're also seeing outperformance here from profitable mid caps and profitable small caps. And we did see the Russell outperform the Nasdaq 100, but not necessarily the S&P 500. But, these indices are largely flat today. For the Nasdaq 100, down 0.2%. You pretty much call that a flat day. Mixed internationally, India, China fell. Middle East and Europe did gain here today. Now, crypto really was up like 3-4% in the pre-market here, down 0.88% here for Ethereum, down 1.84% for Bitcoin. So really taking it on the chin. Volatility ticked up ever so slightly, inconsequential. We saw 2-year and 10-year yield fall, TLT rose, and then gold and silver again. This debasement trade, the market really getting into the gold and silver trade. You can see gold looking like it's actually putting in a bottom right now. This is the weekly chart. You see that this is the bottom right here. Looks like we're going back to 400 GLD or 4,000 gold. Silver up 4.5%, nearing these 52-week highs. Pretty much, if it was to close the week here, that would be a weekly 52-week closing high for silver. If we just look at the last year, you can see this is where we are. That is the high. Pretty much that is the high right there. This is the daily chart, by the way. So not quite a daily closing high, but a weekly closing high for sure. And I mean, like 49, we're just a stone's throw away. We're one good day from silver reaching those 52-week highs after pulling back, 12%-ish? 15%. Wow. Didn't realize it was that big after silver actually being in quite a bit of a drawdown there on the daily chart. So let's go back to the S&P 500 really, really quickly. Flat day today. So the weekly chart, we look at this pretty much every single day. And, ultimately, there's nothing concerning to see here for the weekly chart. And even if we are to pull back, like I say this every single day, even if we are to pull back all the way to this area right here, the 6130 area, we find support right here, and then it's onward and upward, all the way back to 7,000 S&P 500. But I wouldn't be surprised to see the market continue to rally and a lot of the big tech names to follow suit. Now, diving into the daily chart, and you can see right here, ultimately, if you look at it, the technical setup, things are looking largely bullish. We sort of have highs into all-time highs here for the S&P 500, and we do see pullbacks. Now, we put in a low right here. Now, we did pull back. We put in a low right here, but that's actually a higher low, right? This is a higher low relative to this low right here, and we continue to bounce. If we go ahead, take out these highs in the S&P 500, we break above, take out these highs, and then continue to move higher, right? That's just a textbook trend continuation. Ultimately, the trend is like this: higher highs, higher lows into all-time highs. That's exactly what we're seeing right now. The thing is, it just feels scary when we get this, but it feels euphoric when we get this. But the market really, fear is a greater emotion than euphoria, because we extrapolate, fear in the near term to what it's going to mean to us 5-10 years down the track. Whereas when markets continue to rally, we feel good about ourselves. That being said, the market looks really, really strong, and ultimately this is still a buy the dip market, and that's all I've championed pretty much all year. I've said buy the dip, and we were buying the dip right here, we were buying the dips right here, we were buying the dips right here, we were buying the dips right here, we are buying the dips right here. Ultimately, what you want to do in this market is you want to buy the dips, because market breadth looks really, really solid, and the AI trade is simply not stopping. When you look at the Nasdaq 100, right, very similar situation. We're putting in a higher low, rallying. The S&P 500 looks a little bit stronger. And if we look at the RSP, and while we're not quite at all-time highs, the move off these lows has been quite significant. But this is the equal weight, right, trading at all-time highs. Even if you look at the mid caps and small caps, they're all trading at all-time highs. The Russell 2000, right, bouncing off these lows, putting in an equal low, not quite a higher low, but bouncing off here, and that's all-time highs for the Russell 2000. Very, very solid stuff here for the market. So for everything we saw today, even though this does feel scary, guys, when you look at this market in aggregate, when you zoom out, things are looking really, really good for stocks as a whole. Earnings are growing, margins are expanding, and generally speaking, in that type of environment, you want to hold stocks. Now, crypto is actually like doing a bit of a dump fest here. If we go to Ethereum, look at what's happened here on the day, right? If you take it a measured move, if you just go on a percentage return basis, Ethereum at one point was up 4%. We're down 1.24% now on the day. Now, if we go to the daily chart, yeah, it's been a bit of a dumpster fire here for Ethereum on the day. And, we said that we're looking for a bounce right here, but we wanted to see follow through. We did not see follow through. It does look like Ethereum is rolling over. Ultimately, we want to be buyers in this area right here, 3,200 to 2,700. Now, I know this is a really wide range, but this is such a high beta asset. You need that super wide range. That being said, I am looking for Ethereum to bounce. And if you actually just take a measured move, right, like Ethereum is down 38% from its highs. Now, I know it's really weird to sort of go this peak to trough situation, but yeah, 38% from these highs down. I think ultimately we're looking for a bottom in the near term rather than a top. And even if this is to roll over, I'm still looking to buy the dip in Ethereum. Same with Bitcoin as well. Bitcoin, if we don't hold this 100,000 mark, we probably can then enter price discovery to this lower area right here, potentially even the 80,000 area. That would be really, really painful for the market and the crypto market as a whole. So the bulls need to step up like they did right here. Now, we do know that, look at all these wicks right here. So bulls are certainly coming in and buying the dip. As you can see right here, they're definitely coming in and buying the dip at these levels. But these candles are not that constructive when you look at it in aggregate. So bulls, you want to buy the dip right here, take us higher. It's 100,000 mark. I think we're going to see a flood of liquidations here in this market. That being said, still bullish long term on crypto. Now, talking about stocks, we look into the end of the year, stocks that I think are going to rally. I think one of them right now is Meta. If you're looking for a mega cap name, I think Meta is probably where you want to start adding stocks to your portfolio. Meta right here. If we take it from a peak to trough measured move, right, Meta's down about 20%. Guys, Meta's in what you call a bear market, a stock market crash. There's a 20% pullback from peak to trough, right? And I think as long as we hold this low right here, if you're looking at like a higher low being formed and for the market to go higher, I don't think Meta's out of the air trade. There's just a little bit of concern in the market, but that's what markets do. And I do think we'll probably go ahead and fill this gap. Another name that I do like is NBIS. Let's quickly get this chart up. Guys, this company did $150 million in revenue, right? In its last earnings call. It's looking at a 7 to 9 billion with a B. This was million with a B, right? Annual recurring revenue by the end of 2026. That's in 12 months, 13 months from today. So I do think right here, where we had this massive gap up, this $86 area, this is probably where you want to buy. It's also where we had this tariff tantrum resistance. So support turns from resistance, I think, sort of this $86 area right here, let's call it $90 to $85. This is where we want to be buyers long term. I think the stock is $130 stock by the end of the year, a $200 stock sometime in 2026. You think this is a big move, but they're going to be like 10xing or more, 20, 30xing their ARR from today into the end of next year as they bring more compute online. And the market is really going to love that. Now, I also do like the energy space. We know for a fact energy is a big bottleneck, and I really like EOSE, Energy Enterprises. Now, I sold some $15 cash secured puts on this name. I'm a little bit underwater on those. I sold it for December, however, but you can see we did see a big move off the lows right here. I actually might not, let me just quickly check. I might not be underwater on those anymore. Slightly underwater, down 2%. Interesting. So I got them at a good time. So slightly underwater on them, but if I want to get a sign on this name, I think this is definitely going higher. Look at the strength in this chart. And ultimately, I think we're going to see consolidation in this area, and then we're going to make the next move higher. I do think AI stocks are going to continue to rally into 2026. We're just seeing a little bit of pullback. We're just seeing a little bit of a pullback. And I do think stuff like SIFR is definitely where you want to enter. These are names you want to buy for 2026. I know it looks ugly. It looks like it's breaking down, but this is what happens in these high flying beta names. Now then, if you're looking at value names, some of my favorite value names that I do think you should probably start looking to buy right now. One of them is Novo Nordisk, right? It looks like we're starting to find a bottom right here at the $45 mark. This company is still growing, right? Margins are shrinking, but I still like this name. I think it'd be very, very well, but understand this is a value play and you are trying to catch a falling knife. Another one is STZ, Constellation Brands. I think, this is at a 52-week low. I think if you're looking for a value name, this is probably where you want to look. So for those that don't want to play the A names, you want to play value, I think, this could probably see a rally into year end. And I think the worst is already priced in and behind us for both of these names. Guys, and diving into sentiment, this is the Fear and Greed Index, and we continue to remain in this fear zone right here, especially especially as we get positive developments and especially as we enter this seasonally strong period of the year. And guys, with the market being in fear, this is simply fuel for the upside that can push us higher. This is probably what you want to see right around this time of year, but it's time for the bulls to start pushing into neutral if we want to move higher. And at the end of the day, guys, when we look at the tailwinds to this market, the dual tailwinds to this bull market continue to trend higher, those being earnings and margins. You can see next 12 months earnings per share continue to trade higher. We're looking at $304 in earnings per share for 2026, 14.2% forward margin expectations here for the S&P 500. And we all know that when earnings are growing and margins expanding, stocks tend to do very, very well in such a scenario. Another big tailwind in this market is the Treasury General Account. Ultimately, with the government shut down, the Treasury built up its TGA reserves. With the government reopening, hopefully the vote happens tonight and that passes. We're going to see this being drawn down in a very significant way. This is going to move down, and that is essentially just liquidity being put into the market, right? The TGA drains liquidity from the market by building up bank reserves. Once the shutdown ends, all that liquidity comes flooding back. And that is why we could actually see the seasonal strength we typically see here in the fourth quarter, making higher highs, higher lows into a December rally. If we get that, it's going to be a very good year in 2025. But we have to pair that with the macro. And when we look at some of our economic indicators, right, we look at the weekly economic index, things are looking actually really, really good. Not too hot, not too cold, telling us the growth environment in the economy is looking very solid. Now we got the latest data here for the federal employment tax receipts. And right now we're looking at 6.1% growth here. In fact, something that if you look at the evidence here, the data for prior shutdowns, they always went negative, is which what we saw in the last couple of weeks. This time we actually saw it flip positive. So this is possible a mini sign of acceleration. We will only know once the shutdown ends, and we're getting all of that data over the next couple of days. Tomorrow we're getting the initial jobless claims data for September, October, November. We're getting the core inflation data. We'll also get the NFP data, the CPI data, the PCE data, everything in between. There's going to be a lot of data. We'll see how accurate it is, but do be prepared for volatility because things can get out of whack. Now, with regards to what's happening for the rest of the week, Disney is the biggest name. Tomorrow, we also have Brookfield right here, as well as Bitfarms. They're reporting earnings, and then Applied Materials, as well as Nubank. They're reporting after the close. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.